Hello, hello everybody. My name's Ian Hawkins. I'm the head of content here at Swoop. I am delighted to welcome you to our webinar on this week's budget and what it means for you and your business. Let's do some housekeeping before we get underway. First of all, we really welcome questions today, but please, 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 could you make sure they go in the Q&A box? If you put them in regular chat, I've got three things to look at, and if they go in regular chat, I might miss them. So Q&A is where I'm looking for your questions. If you have a question, we would really like to answer it in the time that we have, so pop it in Q&A. The chat box is where you can drop us a message if you're having technical difficulties. I have a colleague looking at that and nothing else. They're sitting quietly in the background, but if you have any problems at all, go into the chat box and put your problem there and they will try and sort you out. My experience of Zoom is if you come out of the meeting and then come back in again, everything will be fixed, but that's there if you need it. In any case, this meeting is being recorded and it's going to be posted on swoopfunding.com. If you would like to watch it again or recommend us to a friend or colleague, that is of course where we will be. I also have to say this webinar is for information purposes only. Please do not consider this as financial advice or an endorsement of any specific product or investment. That to one side, let me welcome the panel we have today. I am joined by Andrea Reynolds, who is the co-founder and CEO at Swoop. We have Ciaran Burke, who is the co-founder and COO at Swoop. And we're delighted to have a special guest, Chris Downing, an ex-accountant now working for Sage. Hello, panel. How are you doing?
Great, thanks. Very good.
Hello there. So I'm going to start with you, Andrea. Let's just have a quick roundup of what's been going on. Andrea, would you fill us in on the bigger picture? What's happening in the wider economy? And what is Rachel Reeves trying to do with this budget?
Yeah, so I think every time it's budget day, there's two things we all care about as business owners after the Chancellor has sat down. The first is, what is the effect on the markets? How do the markets respond to that budget? And we all probably learned how do markets respond after the Liz Truss mini budget. The good news is the markets were fairly stable, so slight increase in gilt yields. And the second part is, what's the effect on inflation? So to start with, I would say the effect on interest rates. There was a slight increase in gilt yields of about 10 basis points. So that means interest rates are likely to stay higher for longer. The second part is this was an inflation boosting budget. So the OBR had forecast we were going to have inflation of 1.9%. They've now reforecasted that to 2.5%. So what does that mean? The Bank of England might be a little bit more reticent. We're waiting for the next interest rate decision on the 7th of November. What we were all hoping for was a cut. Not entirely sure if that's going to happen now. We were expecting 2 cuts before the year end, possibly 1 coming now because of the higher inflation, based on the decisions that we're about to go into in granular detail. So I would say we're still in this territory of 100% debt to GDP. It was 80%, now 100%. So just treading the water with the markets, but glad that there was no major implosion like we had in the mini budget that time.
Thanks, Andrea. So that's the big picture. Chris, what about businesses? What's the big issue that you can see small businesses having to overcome as a result of
big
this
issue
budget?
Or the main issue for businesses is actually what is going to be your employment cost base from April next year. So whether you had people on national minimum wage, the increase which has been reflected and really happening from April, and the big one is the increase in employers' national insurance, effectively going from 13.8% to 15%, plus a lowering of the threshold. So for those businesses with less than 5 employees, about the same, but those with more will be seeing significant costs. So therefore, it's actually having visibility of what your employment costs are going to be from April and managing that going forward. That's the big one.
Lovely, thank you. Ciaran,
Ian, just put that into context. We've already done our calculation and we're up at 40,000 impact already.
Yikes.
So yeah, it's on average about £800 per employee you have. So that's the impact, and as Chris says, you need to start planning for that because that's coming in April.
That is a chunk. Right, well that's the bad news. Ciaran, not to put you on the spot, any opportunities you can see here?
Yeah, I'm usually the one to try go find the positives, but yeah, as a business owner, it definitely overall is as bad as both Chris and Andrea are alluding to. But if you happen to be in certain sectors, there is a lot of investment going into a certain number of name sectors. So, should you be working within AI, quantum computing, anything within the kind of green, clean energy sectors? Then there is very good news in terms of the level of investment going into there. So I think whether you're starting off as a new business or happen to be in those sectors, then overall pretty good. Potentially also good for construction because there's been a further enhancement in terms of money allocated to new building projects, new road projects. So again, if you're in construction, that will also be good news.
Okay, thank you very much indeed. Right, let's break down this budget into the key tax and policy changes. Labour has been trying to avoid yet more austerity. Well, that's what they say they've done. Does that ring true with what they've done, Andrea?
Yeah, this budget is tax, borrow, spend. And so in this budget, they're increasing spending, which if you're in an era of austerity, it's usually tax increases accompanied by cuts in public spending. So this government are basically placing a bet, it's a big bet, that borrow to increase spending to generate growth. That's the theory behind what they're doing. So you then have to say, well, let's look at where the spending is and will that generate growth? So what it looks like is we'll have a short-term boost in output as they invest in schools, affordable housing, infrastructure, etc. So we should see, and then obviously further funding for the NHS, but that's to maintain and reduce waiting lists as opposed to a real capital spend that leads to growth. So that's their bet. And so we will wait and see. So it's not austerity per the George Osborne era, but we need this bet to pay off because what we need to be doing is growing our way out of the big deficit that we have. Otherwise, we will always continue to have a high tax environment. But that's the bet. So there are, as Ciaran said, there are some elements in there. The bets are going into sectors that can really transform the economy in terms of AI, quantum computing, clean tech. The bets are going into increasing the supply of housing, accompanied alongside reform of planning. So that should boost growth. So some areas I think that we're seeing. What the UK has to do is get out of its productivity funk that we have. And so what I'm seeing is they're increasing wages while keeping things like full expensing. So they're trying to encourage us as business owners to move more towards automation, technology, and improve our productivity and basically have higher value jobs coming through. So I see their theory. I wouldn't say technically this is austerity. I wouldn't technically say it's a growth budget. I think it's the beginning of their 5-year term, giving us the bitter pills in this one and hopefully improving the news for us over the course of the next 4 budgets after this one.
Right. I mean, but earlier, before we came online, we were talking about this difference between the operating environment for businesses versus placing these strategic bets. So what are these strategic bets? What do they look like?
I think, as Ciaran pointed out, this is just moving towards clean tech energy, AI, quantum computing, and then trying to unlock growth in other areas like increasing the supply of housing, improvements in the construction sector, etc. So I think that's where those bets are being placed. But as I say, there are other small items in there that are neither a tax nor a spend. For example, changing the apprenticeship levy into the growth and skills levy, which means rather than you having to apply your levy totally towards apprentices, you can actually now apply 50% towards training and upskilling your employees. And then you get to choose your provider outside of the apprenticeship scheme. I think that's a smart move because we could all do with continuously upskilling and training our employees. So I think there are some elements in there that are the signals that they are looking to move towards a growth plan. It's just not entirely obvious in this budget.
Chris, I can see you're itching to have a say.
Well, very much so, because I think when we look at UK PLC compared to our European partners, we are not as digitized as we should be. So in our bubble, we think we are forward thinking, we're doing the right thing, we're ahead of the game. But actually, when we have those themes like e-invoicing, where there's the electronic transmission of invoices from one business to another, at last this summer, we now have that as part of our consultation, which means that we will be able to trade better, faster with our European partners. More importantly, internally, UK PLC will be more efficient, more productive, less time spent rekeying information, which means fundamentally, businesses will have an understanding of what money they are owed, what businesses owe other people, and effectively release the cash in terms of tied up in terms of working capital, which then means that cash is then available for reinvestment. So therefore, it's all about that digital age, whether it's AI, digitization. It's basically seeing UK PLC at the forefront of all of that.
Because that's a huge issue for businesses, isn't it? Knowing what's coming, what's going, and why somebody's taking longer than they should to pay you.
Yes.
Okay.
Overdue payments is a big problem in the UK.
What about these changes to national insurance contributions? What does that mean for SMEs? Andrea gave us some figures. Ciaran.
Yeah, I mean, like, this is the overwhelming bad news. I mean, we're all going to have to pay 1.2% extra per full salaried employees from April of next year. The other kind of potential issue that we see in the budget is because there's some of those kind of immediate growth, which is good, stimulus, we like stimulus, but because of that, you create inflationary potential pressure. The other inflationary pressure that's in the budget is the increase in the national minimum wage. So we'll see a kind of 6.7% increase in that, and then we see a 16% increase in it for 18 to 20-year-olds. And this will be exacerbated for kind of service-based industries that will employ a lot of the national minimum wage employees. Coupled to this, they have been benefiting, for those on the high street, the retail, hospitality and leisure, a business rate relief of 74%. This has been reduced to 40%. But it's still a significant business rate that they're going to have to expunge on top of increasing minimum wages, on top of increasing national insurance, which in turn often lead to big changes in pricing and what we as consumers then receive. So as such, that could have a impact in what we've tried to achieve over the last 2 years in terms of reducing that inflation rate drain. If that suddenly spikes up, then where we were expecting the Bank of England to come out with base rates cuts, or even 2 base rates cuts this year, that might get delayed again. And that is then poor news for business owners that will then maybe take a more aggressive or conservative approach when it comes to investment. Because on one end, you're thinking about your current employee base, as Andrea said. We ourselves will have an extra 40 grand annual spend next year. So you're thinking, okay, that 40 grand could have gone into a new employee. You may not make that decision to do that now because you know how to receive that. You may have then actually decided to change. Actually, no, I'm going to go for that new employee because I know the bank interest rate has come down, so I can manage maybe an investment or a borrowing to be able to go and predict that growth. If that rate doesn't come down, I'm then not able to make that decision. I'm already having an increased cost base. So the changes I think are very unfortunate from what appeared to be at the top of a very much growth mindset orientation. But actually, when you look at like the impact levels, it doesn't make business owners think growth. You're thinking more laterally. How can I look outside the UK on my supply chain? How can I kind of lower costs in certain areas? Should I increase my contractor footprint? So all the things that the government probably don't want you to do, you're probably thinking about things that you would then do. And interesting enough, while I definitely commend, and it's great to see that they are thinking for the long term, it's not just about a 5-year cycle. But the ironic thing is, when we look at the OBR, they've come out and said that the economy will be the exact same size in 5 years as it will be today with these changes, which seems a bit mad. And 5 years is a lifetime for most business owners. So if you're doing all this to create the exact same environment in 5 years, albeit that the 10-year vision should improve. I feel like they probably could have thought through a bit some of these levers, or give business owners maybe exciting levers to play in, to think about growth. Whereas I think this is a case of, we're going to leave most things as they are, and then try tax you a bit more on your current employees. So yeah, I think it's disappointing from that side of things.
Andrea.
Just on that as well, just to say, look, at the end of the day, I would say business owners, we're very emotional human beings. We do start businesses, we grow businesses, we take incredible risks, we pay ourselves last, and we do this because we're passionate and we believe in what we're building, and we believe in paying our employees first. We believe in putting everything first to keep the business alive. I think the message that they've sent in this budget in terms of business disposal is a really negative message. It's put all that risk in. We're asking you to grow. We're asking you to have the broadest shoulders in taking this tax. And by the way, when you're ready to retire and maybe reap some of the rewards of all the risks that you've taken and all the taxes you've paid along the way, we're now going to increase that from 10 to 18% for the base rate and 20 to 24% for the higher rate. And yes, we'll let you keep the entrepreneur's relief. That's a tough pill to take if you're
Andrea, this is the whole capital gains tax angle.
Yes.
Just talk me through this in a little bit more detail. CGT, what has been the change on that, and how is it affecting people?
Yeah, so the big changes, I mean, I thought the government were very smart politically. They were delivering all this bad news, leaking all this bad news, and the bad news that was being leaked in this regard was they were getting rid of entrepreneurs' relief. I think that would have been a political disaster for them. It'd be like the Cornish pasty of the days of George Osborne. I don't know whether you all remember that, but it would have been like that. And so the bottom line is, they weren't intending on getting rid of entrepreneurs' relief, but what they were doing then was coming along and saying, thank God we didn't get rid of that. But by the way, capital gains tax is going up. Now, why am I passionate about that? This isn't about a business owner. Usually when you're an entrepreneur, you're a multiple entrepreneur, or you believe in other entrepreneurs once you've exited your business. So what you're looking to do is retain the capital of an exited entrepreneur within your economy so that they go back and reinvest. You can see it with some of the great tech companies like the Revolut guys who've exited, who are reinvesting in the tech sector, etc. You want that capital to stay in the country. The message they've given is, if you stay here, you're going to pay significantly more tax. And at the lower rate, it's gone up from 10% to 18%. And at the higher rate, it's gone from 20 to 24%. So I just believe in creating the sentiment, because we are emotional. We want to know our government is on our side because we have enough challenges. And I felt this budget was a little bit like, we expect you to have the broadest shoulders as businesses. We expect you to absorb these national insurance rates increases, minimum wage increases. Our energy costs are going up, the inflationary aspect of this budget. We expect you to absorb that, survive, grow. And by the way, when you're done with all of that and you're exhausted, we're expecting to take more of your rewards at the end of it. So I think they've a little bit of homework to do. It's obvious none of them have ever started or built a business. And I think a little bit more consultation with people on the front line might help them for the future budgets that are coming.
You've said that before, that it's clear they haven't started or run a business, and I was going to anonymize that and say that I'd heard from somebody, but you've outed yourself, so I don't have to pretend. Chris, let me come to you. But what about making tax digital? Could you unpack that for us?
Yeah. So if you've been living under a rock, you may have missed this little thing called making tax digital. So brief history of time, MTD kicked back in March 2019 for about VAT. Now the talk of the town has all been about MTD for ITSA, but now ITSA has changed to IT. So it's MTD for income tax. So if you're an unincorporated business, a sole trader, or you have property income, and that total income, I mean gross income, sales, turnover, rental, whatever you want to call it, is more than £50,000, in about 360 working days, being April 2026, you will go from preparing your accounts once a year to be mandated to use digital tools and file a quarterly update to HMRC. That's a big change. And we're talking about not just a couple 100,000, but 1 million or so small businesses who'll be adopted into that. With that, they'll be phased in. So April 2027, those between the 30 and 50,000 pound threshold will be mandated. And the news from yesterday is the fact that by the end of this parliament, those sole traders with more income than 20,000 pounds sales income will be digitized as well. Which basically means, as a business, we're seeing a change in digitization of tax. HMRC are trying to get their house in order. Rather than having different models, different computers and databases, they're trying to bring it all together. But also they're trying to encourage businesses to be digitized as well and report information more regularly. So business types like partnerships, that's still off the radar. So that's gone quiet in terms of when they will come under the MTD theme of work, but also limited companies, still no news on that. But let's rest assured, there's consultations in place. There's companies' house reform as well. So at some point in the future, there will be more digitization. But it really shows the point, is the fact that businesses are more successful, they're more productive, they have awareness of their finances, and they can plan in the future with more confidence if their books are digitized. So it's just the long-term gain of really increasing productivity in the UK.
I mean, all of these digital tools for managing money and finances and things are great, aren't they? And they have to be, because they do make a huge difference.
Yeah.
Massive difference. It's awareness and confidence. And when you think most businesses, they may be able to understand where they are on a day-to-day basis. Or we've had a good week last week in terms of sales. We know what our VAT liability is, but really that big liability is either their income tax or their corporation tax, which they're either paying once a year or twice a year. And that's a lumpy sum of cash. And suddenly be able to find out what you've got to pay, find the funds, pay it, then actually creates a bit of anxiety and unsuredness within the business, which means it stalls growth, investment, and then also strangely messes up, let's say, paying suppliers on time as well. So having that confidence in terms of tax liabilities is particularly important for any business.
Yeah.
Grand. Let's move on to funding opportunities and support for small businesses. I mean, we all love a grant. But are the grants being offered in place of more business-friendly tax policies? What is the government actually doing to promote this growth of which they speak so highly?
Yeah, so I think this is where a lot of that, I was saying, kind of the positive trends, the top of the webinar was a lot of I suppose what you would deem kind of grant funding or competition funding is going to go into the biotech, AI, deep tech, clean energy landscape. And you've seen things like the launch of the Manchester Prize, which is basically a 1 million prize fund every year for kind of the best AI innovation within the country. You have a 2.5 billion investment into quantum computing. There's a 900 million investment into supercomputer. So I think what we can expect in terms of what gets trickled through, certainly through Innovate UK, will be continued investment, whether through competition or grants, but really going into those kind of key trends around technology and green energy. And you can see it even in some localized areas. So there's 26 R&D projects that have been identified within Glasgow, Greater Manchester and West Midlands. So again, location can play a part. We kind of saw this in previous budgets with investment zones and free ports. So I think, yes, I think the grants landscape is definitely going to be fruitful, but fruitful for those that are in those particular sectors. Also, just to note, the R&D tax credit scheme hasn't changed as well. So again, it's a pretty vital scheme for all small business owners that are innovating. And often we've delve deep on webinars like this around different changes there. So I think it's important one to pull out that the scheme is very much still there, and businesses can avail of it. And then also for startups that are using the SEIS or EIS investment scheme, there's no changes, and that's being pushed out till 2035 in terms of any change on that. So again, that's welcome news in terms of the assurity there for either new starts or relatively new businesses that are looking to take advantage of the EIS, SEIS, and then ongoing for businesses innovating through the R&D tax credit scheme too.
I think
Yeah.
people are nervous about the R&D tax credit, aren't they? Because of the crackdown on it. And Andrea, what were you going to add?
No, I was going to say, I think this is okay. Let's give one kudos to the government here. There is an element of stability appearing, like so in the spring statement, there are going to be no tax changes. So there's a change in the rules that there'll be a one-off budget. The spring statement will not be Rachel Reeves coming back looking for further funding, increasing taxes further, or making changes. And quite honestly, you look at the number of budget webinars we had at the previous government, and then we go, oh, remember we told you that about R&D? Well, now it's different again. There was 19 tax changes over the course of that government. It was hard to keep up. So I think there's an element of stability that we can start planning. So the fact that it was the previous government that brought in full expensing, and this government has kept full expensing, we can take assurance from that we can start to plan for investment. The fact that they're keeping the SEIS, EIS rules, the commitments to that's good planning for us. And the fact that there was no further R&D tax credit changes, again, finally, we can start to solidify our understanding of the previous tax changes. So there's an element of a longer term picture here. So I would say that's a positive. We all need a bit of stability in our lives to be able to plan investments in our business.
Lovely. Chris, Andrea mentioned full expensing here. Full expensing was a great idea brought in by the last government. What difference has full expensing made to businesses?
I think just a better understanding of taxation. Because in the good old days, if you spend £100,000 on a new piece of plant, as the business owner, you think, oh, I'm just getting a tax write-off. But you weren't, because you may have just gained 40% of that value written off in year one as a percentage. But with the full expensing, and especially with the levels which they have been, every business has benefited. So therefore, whether you're spending £10,000, £100,000 or £1 million, it is in your mind the fact that, yes, if I add that back to my profit, I'm getting tax relief on it, which basically meant that people gain the benefit of actually investing in their business, buying new kit and equipment. So I think it's good. Again, stability, no changes in that. So businesses can actually carry on thinking about where am I going to be over the next 2 and 3 years' time, what I'm going to invest in, what tax relief I'm going to be getting, and therefore it has been beneficial to businesses.
Yes, I remember when I was a teenager having to help my dad with his accounts and figuring out what his van was worth this year.
Well, talk about vans, and I think
yes.
this is the small print of the budget. Is that if you remember from maybe 18 months ago, it was one of those budget events. HMRC dropped in those double cab vans. Those ones which a lot of people have through their limited companies, because the benefit in kind thresholds are very nice and very favourable. They were going to be deemed as cars, and within 48 hours, that whole announcement was a whole U-turn and nothing of sense. But in the small print of the budget yesterday, double cab pickups are now going to be treated as cars for benefit in kind purposes. So it's going to be the value of them based upon the benefit in kind, not that fixed value of £3,500. So this is going to affect quite a lot of those small limited companies who have had a double pickup van, paying low benefit in kind, plus farmers, etc. So yes, so therefore it's all about transition and planning. So therefore, anyone you're contracted in by next April, you will not be affected, but it'll be phased in thereafter. And therefore 2029 is the key cutoff date and when there'll be significant changes. So people got planning, but there'll be a transition going through it. But the key thing is, if you want to buy a double cab pickup van or renew it, do it by next March, effectively, before the tax really kicks in.
Oh, nice. Okay, good to know. Ciaran, I'm going to move on to you before we move on. And it's about the high street, which, the high street has been struggling. But a changes to business rates going to be a shot in the arm, or does retail have bigger problems than business rates?
Yeah, so I kind of touched on this earlier. I think it's a pretty tough for retailers. I think there's a narrative to be like, yes, we're keeping a business rate relief, but they're actually have been benefiting from a 75% relief rate. They'll only benefit from a 40% reduction from April onwards. So in fact, they're going to be increasing what they're paying on business rates. coupled with we're going to see, as I said, a 6.7% increase in the national minimum wage for those 20 years and older, and a 16% for those employing people between 18 and 20, coupled with an increase in national insurance contributions. So I think it's going to be pretty tough for retailers in high street, because as a consumer, where retailers are now probably going to have to put back some of that increased cost back to the consumer in terms of their pricing and how they're set up. That just moves the other consumer to look at online models where they can get goods and services, which is obviously going to have a regressive impact on the high street. So I think that is a real shame, and I think we could probably do more for those in retail, hospitality, and leisure, particularly those that are taking to the streets and having their kind of shop fronts there, because I think it's pretty challenging environment for them.
Okay, let's move on then to the tax implications. And Chris, as you're our ex-accountant, and I can't work out whether you're a gamekeeper turned poacher or the other way around.
Just a recovering accountant, how we want to play it, yeah.
An accountant in recovery.
Yeah.
What have you seen that businesses will need to plan around tax-wise?
The key priority is staffing costs, and this is the whole point. It's actually, despite all the noise and the huge headlines of the budget, when you actually go down in terms of what actually happened, there's no changes in corporation tax, so a bit of stability. There's no changes in the income tax in terms of what the employees get paid. It's all about the employer's national insurance. That's the key theme for businesses. And therefore, understanding what that means for you, speak to your accountant, look at the payroll, and understanding the future cost-wise going from April next year. That's the key thing for business owners. Then it's thinking about if you still do have investing in terms of, let's say, zero-emission cars. Fortunately, you've still got the full 100% first-year allowances on those, which is a good thing. So again, if you're thinking about benefits in kind on vehicles and electric vehicles, where you go, if you're still getting the benefits from that. Again, nice to hear the corporation tax roadmap is not changing, which is very useful. We've talked about capital gains tax and the changes. I think the other key is business types. When you think about the agricultural market or family-owned businesses, we've had agricultural property business relief, agricultural property relief and household business relief. The whole key theme is the fact that if you've got a family business, you should be able to pass it on to the next generation without being burdened with the additional taxes for that disposal when there hasn't really been one. Unfortunately, there are planned changes with that. So they say there'll be reform from the 6th of April 2026. And potentially, if you imagine you've got a farm and it's worth more than £1 million, it would be no cost. If it's worth £1.5 million, and that's not too much of a stretch of imagination with land prices it is at the moment, that other £500,000 could be taxed at effectively 20% when you look at the availability. So as a family-owned business, having to find cash to fund that disposal upon gifting or transferring that ownership to another party is going to be quite painful. So again, it's having strategic planning, who owns what. So like everything, it's the small print which is dictating. And then I think the other thing about business taxes is obviously it's a case of how you're going to be selling your business if you have any plans. And the fact that the cost of taxation in terms of that disposal is certainly increasing. So a case of either, are you in a position to accelerate that disposal by next March? And really, when you're under pressure, mistakes happen, and that's probably not the right thing to do. It's doing things in the right manner at the right time. But also it's thinking about your worth and what you're trying to get out of that business over the next couple of years. And also it goes to the point of the fact that this is this government's first budget of the year or of their term. And it's a case of there has been bad news. They are trying to balance the books. And therefore, it's a case of what will we see maybe in the next 3 or 4 years. I'm not saying there'll be any changes, but there may be changes before the next election. So it's all about timing and thinking about your own personal time in terms of what you want to do your business. So again, strategic planning, speaking to your accountant, thinking about what's possible. Taxation is particularly important to actually consider.
Yes, especially that CGT. Yeah, sorry, Ciaran, go on.
Yeah, just one thing on that in terms of thinking about it from a tax perspective, particularly where Chris was correctly identifying the big one in terms of what business owners are going to be paying more than national insurance. So One thing to potentially look at and think about is salary sacrifice or salary exchange. So it allows business or SME employers to be able to allow their employees to opt in for salary exchange, which allows them to put more into their pension pot. It creates a reduction in the overall net amount they receive technically, but it does increase the net pay and also the net benefit to pension. So as such, the overall tax that's paid to the employee is slightly reduced from an employer's point of view. So it could be something that small business owners look at, particularly ahead of April, and how that scheme may operate and whether it might be of benefit to their employees or themselves as a business owner. Potentially could be one to really look at when you think about tax and potential mitigation and good optionality for both a business owner and an employee perspective. So I'd imagine that's something that we'll see and probably increase activity in going forwards.
Okay.
And don't forget
Andrea,
the R&D tax credits, because that's still a good news story. The R&D tax credit environment in this country is still an excellent scheme. So, and there were some improvements in the previous budget on if you're deemed a knowledge intensive business, so more than 30% of your revenues is spent on R&D, you get an enhanced expenditure credit, which is actually worth 27% more than it was in previous years. So again, constantly thinking if you're investing in new systems, new processes, you don't have to have invented something. It could be that you've invented new ways of doing or manufacturing, etc. So that's still a positive bearer of innovation within the UK, I would say.
And just talking to our own R&D tax credit department here, I know that there's been a big crackdown from HMRC, and they're investigating lots of people that are putting claims. That's put people off making new claims. But then also there's been a lot of sharks in the water.
I think it's those who legitimately should be applying are applying, and you simply have to evidence your innovation, etc. So I think it's just moving towards they're getting sharper on what constitutes innovation, and that's okay, because we don't want others coming along and ruining the scheme for those who are genuinely investing in research and development. So I think it's a cleanup exercise, and I think what they're doing is just getting rid of maybe some sharp practices that were out there. But for those who legitimately have R&D going on in their business, it's a good thing. So we as an industry have actually welcomed the crackdown at the beginning. I think there's a little bit of they're on a learning curve themselves, but I think it's improving already in the latter part of this year.
Lovely. Andrea, we want to say some things about the change in the apprenticeship levy.
Yeah, I spoke about that earlier. I think it was just the nuance. It was neither a tax hike or a spend. It was more reconstituting what you can do with your levy. And again, just to reiterate, there's a 0.5% levy attached on your payroll. And it used to be that it would go towards apprenticeships, but what they're saying is 50% of that can now go towards training and upskilling of your choice with your choice of provider. So for me, I think that is it's a more balanced approach. You don't always need an apprentice, and you do need to continually upskill and train your employees. So I definitely welcome that. I think that was a smart move.
Okay, what we will do there, that's as far as we've got with where we've prepared to so far. But this gives us about 20 minutes to go to some of the questions that we've had in from our viewers today. I'm going to start with what I will do at the end of this is I will ask everybody to give me their one sentence summary of the budget. So please be prepared for that at 2 minutes to 2. Okay, a question from the audience then is, does the board of experts consider the obsession with net zero a major economic impediment to the UK's future? Chris, are we being held back by cutting our carbon?
Not at all, because really it's the right thing to do. It's all about, if you leave things to the last minute, it's going to cost more. And when you think about the economy, where we should be, whether it's being more efficient in terms of energy or in terms of actually how do we use or actually support various manufacturing industries, it's all about being more carbon and not carbon neutral and doing the right thing. And therefore, it's all about little measures. And it's a case of whether you're a supplier and looking at your supplier chain and actually how you reduce your carbon footprint. It's how you are employing people and encouraging the right methodology of either working from home or using the right ways of transportation. It's all about doing those little bits just for the economy and the environment. But also fundamentally, if you're thinking about saving energy as a business, that's going to improve your bottom line as a business as well. So therefore, the bigger picture does impact the smaller businesses and their attitudes and their approach. So it is the right thing to do.
I think, I mean, I don't know who sent the question, but I think it might be rooted in an element of there is an acknowledged short-term cost, particularly for businesses to transition, particularly manufacturers or those who are in older buildings, etc. And so there is an element of potential short-term cost increases to transition. However, there have been, and this is not an announcement in the budget, but there have been and still are green vouchers available from your local growth hubs, which go towards you getting an audit done on where you can basically reduce your carbon emissions, improve your energy efficiency, and then cost towards implementing that, or grants towards the cost of implementing that. So there is an acknowledgement, there might be some short-term pain, but as Chris said, longer term is less energy consumption, which means less energy bills. And it is leading to a huge boost in a new industry for the economy, which is only a good thing.
Yeah, because I think, sorry, go on ahead, Chris.
I was also going to say the fact that from hiring and retaining your staff as well, the employees which you have want to be part of businesses which are doing the right thing for the environment. And this is why we're seeing within the bookkeeping tools which you may be using, so Sage, for example, we have Sage Earth, is actually tracking and reporting and recording, let's say, your carbon footprint as a business, which basically means that you're in a position to actually understand those costs, because there's no point saying you're going to do something unless you can measure it and act upon it. Sorry, Ciaran, over to you.
Yeah, I was just saying, like, there's a real positive as well for new business owners, because it's very clear what the government are saying. We want to get to net zero. We want to invest in these technologies. So if you're setting up a business, or you have a very clear mandate to know where the money is going. Like, there's 13.2 billion going into make better homes more green efficient. That's like humongous amount of money that the government are putting in that area. So that should encourage innovation or creativity in those areas, whether it's like improving kind of battery life, storage, and usage of wind, usage of solar. So I think that's a really, really good thing, because you can create businesses out of these guidance and opportunity. That there's a significant level of investment there. So for those new business owners, it gives a real clear path of potential areas and avenues to go down, which I always find is pretty exciting.
Oh, and I have a final pitch point as well.
Mm-hmm.
If you're going for lending, you need a loan for your business. There are what's called green lending now. So if you can show your green credentials, banks are now offering lower rates. Particular banks and lenders are offering lower rates if you can prove you're a sustainable business versus someone who's got high carbon emissions. So there's a lot other positives attached to it.
I want to quickly bring in a comment from Eric Warner, who's dropped a note in here, which says, Eric says, efforts to shift the broad economy to clean tech, automation, AI implementation, etc., will all take time to develop and mature, 10 plus years to see real transformational growth. I'm not sure it's going to be that long for things like AI, but I take your point, Eric. The budget investment is upfront loaded and will run thin after the first 2 years. This is likely to create increasing pressure around the next election. Eric's line here, a scissors of despair for the government.
Yeah, like I suppose this is where I thought it was kind of interesting, because I kind of agree with Eric. They have front loaded it, and what that means is if you track the growth rates, as I said, in 5 years' time, when you come to election cycle, the economy by the OBR's predictions will be the exact same. So if you're in the strategic house of Labour and you're like, I want to get elected next time, it seems like in some ways, it's great that they are thinking, because you want people to put country over self. So the fact they are thinking long term is good. But if you were purely looking at from a cynical tactic of how do I get elected in 5 years' time, they haven't exactly landed themselves to land economic growth in the most perfect sentiment in 5 years. So good on them for thinking long. It potentially might hurt.
But then we always.
I think Eric has hit the nail on the head here. I think there's a real sentiment issue with this government, and I think they did it intentionally, which I don't fully understand, because I think sentiment breeds confidence. You need consumer confidence, you need business confidence to then create growth. And so when you're giving bad news stories and telling us about black holes and etc., it dents confidence, even though the underlying policies may not be that bad. I think there's a sentiment issue. I did see Rachel Reeves this morning say the OBR growth estimates are not her lasting ambition. She plans to come back next year with other growth plans, that this is the foundation budget, is kind of the mantra they're giving us. So I think her intention is to increase those growth rates over the parliamentary period. But I do think they really need to dig deep and think about sentiment as they go forward, because that actually has a major impact on business decisions.
Okay, so hopefully, yes, scissors of despair slowly closing. Right, the next question we have is, what will the funding horizon look like for startups and SMEs, especially in the sustainability sectors? They cite recycling. We've sort of touched on that, but is there anything else you'd like to add on about the funding horizon? What's coming down the road?
Yes, I mean, I would say you are in one of the top sectors. You're in one of the loved children categories at the moment. It's a strategic pillar, so that means there is the National Wealth Fund, there is a British Business Bank fund, so they're encouraging private investment to match government investment into the sector. There is Innovate UK funding in the sector. So you're in an area where there is a lot of investment, a lot of grant allocation, and regardless, when you start your business, the best form of funding, it's how Swoop started, is your startup loan. And it doesn't matter whether you're in a sustainability sector or not, the startup loan is one of the best options to kickstart your business. It's over a 6-year term, 6% APR, can have a payment holiday for 6 months. It gives you some breathing space to get your business off the ground, and you can get them for each founder or each manager of the business. So always start there. It's where we started life.
One consideration though for like someone who's just non-sustainability but is thinking of making improvements to kind of energy consumption in their business, something Andrea was touching on earlier, which is there are increasing amount of green loans, particularly from tier 1 banks, from Barclays, Lloyds, HSBC, Santander. But one thing we had Sage Earth actually in here this morning, and one thing we were going through and looking at and showcasing back to the opportunity is looking at the energy spend on your P&L, and by making changes, by changing the source of what you're spending in, whether going to wind, to solar, making those changes obviously help, as Chris touched on earlier, potentially reduce your overall cost, but it could get you cheaper funding. And that's to any sector. It's just what you're changing there. So I think it's important to call that out, and that definitely is an opportunity.
I want to move on to this next question we've got here. This might be one for Chris, which is about how will working people be affected? Is there a hidden wealth tax in this budget? And how will contractors be affected? I think
there are 3 questions in one, but let's unpack that one. So working people. So therefore, it was called the working people will not be affected by this budget. Well, actually, they've benefited, haven't they? So, for example, those at the lower end of the pay scale, that increase in the national minimum wage will be beneficial. And let's be honest, those who are younger as well. So therefore, it is more difficult, whether you're trying to get onto the housing market, save, or just paying for your rent. So it is actually probably supporting those who are younger, starting out in work, be able to actually afford to live as well, because it is challenging out there. In terms of hidden wealth tax, I suppose the closest we can probably get to that is probably capital gains, and really no real changes in inheritance tax as well. But even though only a small percentage of people were affected by that. And then also that little bit of news around the fact that if prior to the budget, if you actually bequeathed your pension to your loved ones, there was no inheritance tax on that. Now there will be plans for that to happen. But I think that's just a nuance or changes of maybe the legislation, which was probably not well written when it was first put in place back in 2016 or so. And then finally, when you think about it, if the cost of employing people is increasing, some employers may consider, rather than, let's say, growing my workforce through employment, should I actually start to contract out my work, whether that's fixed fee or actually even overseas. So it'll be interesting in terms of how people make those dynamic shifting in terms of actually how do they get jobs done. Do they employ and invest, retain and hire talent, or do they start trying to fix their staffing, their people's costs by actually outsourcing that maybe to other UK businesses just to fix it, or maybe putting some of that work overseas?
Okay, Andrea, I can see you nodding, but I'd like to move on unless you're desperate to leap in. Okay.
Just agreeing.
Okay, good. Are there any funding opportunities for new tech startups seeking pre-seed funding?
Nothing new other than what we've described already in the sectors we've described. However, there is it was actually from the previous budget where there is an unlocking of further capital into tech companies, whether it's a startup or scale up. And in particularly in the scale up section, where they're bringing in pension reforms where we can unlock more corporate funding into UK businesses as a whole. So we have the continued British Business Bank funds that divest funds out to other VCs. We have the National Wealth Fund, we have the Future Fund. So, but all of these were there. There was nothing new or exciting over and above what we've just talked about on those sectors that we've described for pre-seed tech. But the key thing, if you're in pre-seed or seed round for investment, is you absolutely need to avail of the SEIS EIS scheme. There is not a business in the UK that is raising without that, because it is the best scheme, particularly in the early stages, and your business can raise up to £250,000 under SEIS, and that was a great improvement in the previous government's budget that increased that amount. And that is the I would say your startup loan plus SEIS, and then moving on to EIS is the best way to fund your business when you're starting out in tech.
Brilliant. Okay, I've got a couple more questions. Maybe these are going to be quick fire as we're coming up to time. Anita Rashiva says, what is the most worrying change for SMEs? What worries you the most?
I think it's a simple answer. It's the national insurance increase, 1.2%.
Yeah, I would say in an umbrella approach, it's the continued cost of doing business is rising. Now, what I would say to everyone is, I don't want to depress everyone. We've heard about how it's increasing with minimum wage and national insurance, etc. The good news is you are paying for essential services that you are being overcharged for. You just don't know it. Okay, there's 4 billion in overcharges in banking charges. There's over 1 billion in overcharging to SMEs in energy costs. So as Chris said, by going digital, you can integrate your accounts into Swoop, and we will find those cost savings for you easily, because everyone is overcharged as a business owner when it comes to essential services. So there is money to be found in your business without having to look at letting someone go or not making that next hire.
Chris, have you've helped lots of businesses in this area. Anything particular stand out to you? Any big wins?
There aren't any particularly big wins. I think it's the key thing about the budget and what we're seeing is actually trying to build an element of competency and stability in terms of what's happening in the future. We've had businesses, depending on their size, have had a hard hit, or it's going to be the same as with employers' national insurance. The key thing is taxation for the businesses is not changing. So I think really the real focus is the fact that there's always change. Tax is always changing, but how you run your business, how you operate, what are your desires and dreams do not change. They just get better. So they're just focus on what you wish to do, and taxation is just output of being successful. So drive that success. And I think that's the positive approach one should always take, not actually just seeing how the government is trying to make life easier or harder being a business owner.
There's a question here from Kathy Caton that sort of speaks to that. And Kathy says, on the R&D side, we've heard lots of horror stories about manufacturing businesses being investigated. Can you tell me more? I mean, the story I heard, Kathy, was about a hairdresser who got a cold call. Somebody said, do you want to have another £7,000 in your pocket this year? And they went, yes, please. They more or less sent off the R&D claim without them knowing it. And lo and behold, they get investigated and they get in trouble. Presumably that's
yeah, but
not really the case if you've got a...
Yeah, I
Ciaran.
think it's really important just to emphasize on that. Like the R&D scheme is there for those businesses that are actively pursuing R&D based activities, and there's a set of guidelines and a clear calculation that can be done. So as long as those manufacturing businesses are going through that exercise, then they will be able to talk through that and explain how that calculation is being done, point to those activities that are R&D. Something that we've seen an increasing amount of as well, to add an extra layer on top to R&D claims and proposals, is to often bring in an independent expert to validate claims. So someone that is very familiar with your industry but doesn't have an attachment to your industry. So getting someone from a manufacturing background that doesn't have an attachment to your business but can stand over the claim and talk into the complaint. We've seen businesses starting to avail of that to bring that alongside, to add validity to it. But absolutely, the scheme is there to be used for those businesses that are complying with it. So as long as those manufacturing businesses are, then they are to be encouraged to go for it and avail of it.
Yeah.
Yes, if the government is going to give you a bunch of money, understand why they're doing it. Andrea.
Yeah, I was going to say it's a huge, I mean, this HMRC are good at processing and understanding and then returning your cash rebate to you. So because it's such a successful scheme, they have to make sure it's going to those who deserve it. And so I'm okay with these rules. You will hear horror stories, but you know, we're processing R&D claims for our customers every day of the week. And quite honestly, it's, as Ciaran said, you follow the guidelines. We make sure our customers follow the guidelines before submission. You share evidence of what you've done. You need to understand they don't know your business or your industry. They're trying to understand some technology innovation, while also like understanding whether you should have the cash refund or not. So I would say we are going to hear horror stories. It's just a bit of a cleanse going on, but we're having no issues whatsoever where there's legitimate claims. It's being processed as normal.
Right. Thank you very much, Andrea. And now, as promised, we are a couple of minutes up from the end. So I am going to say, go along the line as I see you here. Chris, Andrea and Ciaran, we'll start with you, Chris. What is your sum up of the budget in a sentence or two?
The budget is all about, as a business, how do you actually maintain costs when additional costs go into employment? So the key thing is make sure you're budgeting and planning, have a decent forecast in place, invest as normal. If you have a shortfall in terms of working capital, speak to your accountant and work with Swoop. But more importantly, if you want the reporting and cash flow tools, use something like Futurely. Okay.
And Andrea, what about you?
My initial reaction was, what the, like, seriously, how much more can we take? However, I think we're business owners. We're the eternal optimists. We just get on with it. But I think what we have to do is become more savvy. You have to use your data. I'm telling you, there are cost savings to be unlocked. I'm telling you, there are better ways to consume your energy, to get funding into your business. And it all starts with digitizing your business and using platforms like all of us here to help you run a more cost-efficient business. So a little bit, I'm not going to hide my disappointment. This was a tough pill to take. I'm hoping they're thinking we'll get all the bad news out in year one and it'll be good news from here in. And as I say, things can only get better. So that's
things can only get better. Ciaran, I'll end on you. What's your takeaway for people?
Yeah, I think echoing the guys, I think for current business owners, be smart in terms of budget the expected increase so you understand it from a cash flow perspective. But as Andrea says, be savvy. There's definitely savings out there. Look at the salary exchange, for instance, look at your cost base. But for new business owners, the government are very clear in where they're investing. So focus your attention as a new business owner around those opportunities. And then I can see one of the questions, just to round it off, what do we think the impact will be for AIM stocks given the 20% increase in inheritance tax benefits? I actually think that's a very negative one. I think it's a low trading stock exchange at the best of times. So to even put more of a negative spin on it, I think it's not great news for AIM stocks.
Lovely. Thank you very much indeed, Ciaran, and thank you very much indeed to everyone for joining us today. And also, this couldn't be put together without a huge amount of work from the team who is unseen. So thank you to everyone that's held this together and helped this be a flowing, useful hour of everybody's time. Thanks for watching. This will be recorded. There'll be a recording sent out, and I wish you a very enjoyable rest of your day wherever you are in the world. Thank you. Goodbye.
Thanks.
Bye-bye.
Thanks so much.